it's a real interesting day. For everybody out there, if you want to see the charts that I'm going to be showing, I'm simulcasting on YouTube at YouTube .com/Dallas Trading Floor and on Periscope pscp.tv/Dallas Trading Floor. That's so to see the charts that I'm going to be showing here. Also, if you like to subscribe to our mailing list for alerts, that is at DallasTradingFloor.com. Just put in the comment section, fill it out, and we'll get you right on the list so that hopefully we can get you out some good trading tips if you're interested in that. So just wanted to put that out there. This is show number 50, and it's an interesting day, as I say. Market's up strong. I'm just waiting for this market to pull back. Doesn't look like it. We're going to have very important earnings tomorrow, which is going to be on NVIDIA. I have positioned personally on NVIDIA, so hopefully it does well. Just wanted to show you the market direction here. It is definitely up. I mean, look, the NASDAQ currently is trading, when this slide was taken this morning, at 93.4208, which is very, very strong. It's up 1.71%, and just looking very, very strong. S&P is up. The Dow Jones finally is up, and the volume is up. So that's a really good sign. Market trend is up. This is just wanted to iterate here. The market trend is up, so you want to move to full investment if you can at this time, because this indicates that we are in an uptrend, at least for right now, and you don't want to be short anything currently, just because you don't want to go against the trend. That's the most important thing. So market is an uptrend, and that is excellent. Now I'm going to show my stock of the day. The stock of the day is eBay. And eBay is, it's just an old favorite. I mean, everyone knows about eBay. I mean, it's been around forever and a day, and um, here it is. Once more, it's back. But I think that's something you definitely should take a look at. It's just got a lot of technical strength. It's the relative strength has moved through 80. That's very, very key. And again, it's up on my screen. We have a price year to date up 18.22% as of today. But what's important, and this is what I always concentrate in, how has it done for me lately? And it's done pretty well. 8.76%. I'm currently not in the position, but I'm thinking about rotating into it just because of the strength of the stock. So definitely one you want to watch list. Currently selling for about $42.60 a share, with a composite rating of 95. That's my magic number. I typically like to trade only stocks that are in the very top 95, 96, 97, and 98 and 99. Those are the strengths that I like to trade. I like to trade very strong stocks as people are moving into it if I'm going to be long in the market, and that's definitely the case here. So I just wanted to put that out there. Now, for the trade of the day. I have a trade of the day, and it's the same stock that I had the trade of the day on yesterday, and that's Facebook. I couldn't believe the action on Facebook. I was in this, I was in the stock basically at 214, and then yesterday at 216, and it is almost at 230 right now. Just it is just powering up there. It is the most unloved of all the FANG stocks. Definitely one you should look at, just because I think it's breaking out to a new level, and I think it's got a lot of technical strength. Just something that you ought to look at. This stock is doing well, even though the economy is shut down. So definitely want to look at it. Now, the way I trade this stock, this is an actual trade that I made today. Is what I do first is, of course, I buy the shares. I buy 100 shares, and then I sell a call. And this is the 9-day covered call play that I'd like to show you right now. Basically, pretty much unchanged from yesterday. I was able to get over 120% annualized return yesterday on this. Now, what do I mean by annualized return? You think, wow, that'd be great if I could do that every time. Well, yeah, it would be. But basically, what I'm talking about is this is a 9-day trade. So if everything goes right, I anticipate making about a total return of 2.5%. So that doesn't sound too exciting, but if you explain the way I'm explaining it, it's pretty good. You go into the stock with 100 shares. I entered this stock today. I bought it at 228.95 a share. Then I sold a call option for the May 29th call. That's basically expiring in about 9 days. I was paid $448 for that, because that's $4.48 per share for times 100. And then, so the option profit is $448. My upside profit on this, if it exceeds, if it's at or exceeds 230 Facebook, then I do have to sell those shares. And if that happens, I'll make a profit of $105 for a total profit of $553. This is in 9 days. So it sounds like a lot of money, and yes, it is. But remember, you're going to be getting back your shares very quickly on this one. I always also set a stop loss on this, just in case I make a mistake and it's going the wrong way. So this is a Facebook trade, very, very strong. Again, I had a Facebook trade yesterday. I was in that. So currently I'm just laddering up with Facebook right now. I think it's very strong, and it's moving much higher. So just want to take a look at that. And by the way, if you want to look at a stock that's coming up that I think is going to be very, very, very strong, and that's, believe it or not, DBX, Dropbox. Everybody uses Dropbox. I use Dropbox. Everybody uses Dropbox. Well, it is looking very strong. It had some very, very good technical movement on the charts. The charts look extremely strong for Dropbox. It's a cheap stock. Basically, 22.17 is the price currently. Today, it's up 1.91%, $1.91. This is amazing. This is a tremendous move on this stock. Definitely. Here's the thing: when stocks start to break out like this on good chart patterns, they probably will move higher. I mean, that's just typically what happens. So Dropbox is definitely one. If you're interested in a good stock that is going to probably pay you nice dividends, that's Dropbox. Basically, it's in a buy range, and I want to reiterate that the buy price on this is 21.34, and it's already exceeded that because it's trading at 22.16 right now, up 0.41%, up 1.9% just today, very strong. But the buy range on this is 21.34 to 22.41. And this is a buy point with it's got a deep cup with handle. This is a very good chart pattern. And I don't know if you can see this, but if you want to take a look at this pattern, I have the chart up. It's at it's on my YouTube at youtube.com/Dallas Trading Floor, or I have it also on Periscope, so you can take a look at it on your mobile device. That's pscp.tv/Dallas Trading Floor. So it's really it's very very strong. So basically on Dropbox, this is one of the ones I'm recommending putting on your watch list. Not necessarily a buy right now, but if you want, if this holds up tomorrow, I think you might want to possibly pull the trigger on it. I'm very bullish on this one. Dropbox, it's number one in its group, and it's run up 24% year to date, but most importantly, it's run up 13.33% in the last 4 weeks. So that's really, really strong. So I just wanted to put that out there. Dropbox, definitely take a look at it. Now, here are 5 stocks that are near their buy points. What do I mean by this? Well, we have a surging market right now because, as you know, we're going to start to reopen the economy again. And once that happens, well, some stocks will be left in the dust, but others will just push on the gas and go on the accelerator. And so these are ones that I want to put out there as well. I'm in several of these stocks. First one on the list is AMD. The reason AMD is so strong is because as we become a more and more digital society, digital world, there's more and more demand for servers, and the servers are well served by AMD. They make a lot of the processor chips that are in most of the data centers. So as companies like Google, as companies like Microsoft are all beefing up their server centers or their cloud providings, well, they're buying their chips from AMD, and it's on the list. It's got a cup with a handle, which is, by the way, the best chart pattern for breakout, and the entry on that one is 58.73. I am in this. I'm in AMD. I've done well on it. It's moving up. I have a basically just trade until Friday tomorrow on this one, very short-term trade, just like a 4-day trade. But I typically, what I like to do is I like to buy stocks right before they break out, and then I like to cover them with a call, and then if it moves beyond that, then I capture the profit on the upside, typically a week to 2-week trade. So those are what I like to do. The second one on the list is Alibaba Baba. Now, this one I'm a little bit less bullish on, only because the chart pattern is not as nearly as good. Of course, it's a Chinese stock, and there may be some issues regarding its accounting, because Chinese accounting, unfortunately, is not as good as GAAP accounting, which everybody else in the world seems to have to do, but not the Chinese. Go figure. But it is a cup with handle, and it shows a 216.20 buy point, which is an excellent point, which is an excellent entry on this one. I am less bullish on this one, but it's definitely on the list because it is one of the big stocks that's near a buy point. Now, Facebook has just been incredible. because I bought this in anticipation that the entry point of 215.38 would be breached. It definitely was. I bought it at 214, and then right after it broke through, I bought it again at 216. And today, right before I went on the air, and that's the reason I'm late, I bought another tranche at 228, which is pretty high, but it's already moved well past that buy point. I think we might see the trading range of Facebook go higher. I know it's hard to believe, but Facebook has been a laggard. I'm very high on it right now, at least for the midterm, and I think that it's definitely worth worth putting on a watch list. Facebook, if you're not already in it, I think you'd be well rewarded for it. The fourth stock that I have near a buy point today, cup with handle at a 62.23 buy point, is Intel. It's basically the old warhorse of processors, but because all the cloud companies are creating large data centers, the demand for their chips is going very, very well. Also, with the stay-at-home economy, companies like Dell and HP are building a lot more laptops. There's a lot of demand for laptops, so processors are good. And Intel has a very good chart pattern, and that's one of the reasons why it's near a buy point at 62.23. The fifth one is ServiceNow, which is also a tremendous. It's a software as a service cloud king. I've owned currently the cup base entry is 363.05. It's probably not in a buy zone now, but put this one on your watch list. It is a tremendous stock, and I think you'll do well if you're in it. Now, the final one, and this is one of my all-time favorites. I've done very well in trading this stock this year. It's a trading stock, really not a investing stock, and then, of course, that's Tesla. If Tesla hits 869.92, consider buying it. And the reason is because that will show that it has the right chart pattern to move higher. So put Tesla on your list, but don't buy it until it's at or exceeded 869.92. And that's my stocks near a buy list. Buy point today. So that's the list of those. And by the way, this is available on if you go to pscp.tv/Dallas Trading Floor, you will see this, and it also is a list of all these is going to be there. And hopefully also go to my website, www.dallastradingfloor.com, put the comment in and send me an email, and I'll get you on the list, and hopefully I can send you some of these slides after the show. I'm trying to get that ramped up for a kind of an alerts list, because the market is starting to wake up from its deep slumber, and there's going to be some good opportunities out there. So it's good that hopefully I can get some of this information out to you. Just wanted to reiterate the places that you can see us: youtube.com, Dallas Trading Floor, pscp.tv, Dallas Trading Floor, that's Periscope, and of course TikTok, where you are right now. So all those things are good, and I appreciate you stopping by. Now, questions. All right, I have a question. First question from, let's see, Earl. Hey, Earl. Let's see if I can show his question on the screen. I've been having a little bit of problems. Hopefully, by the end of the week, I'm going to have some better equipment than I've got now. It's all been ordered, but it hasn't appeared yet. So hopefully some of these questions I'll be able to answer better on screen. So let's see. I'm going to go take some questions. Hey man, thanks. You like JD? Well, JD is good. JD.com. This is a question from Malcolm Chi. You know, the the stocks, the Chinese stocks are actually doing quite well, and JD.com is definitely the one to be in. It's definitely one of the big, there's several really big internet plays that are Chinese. One of them, of course, is JD.com, and so I think that's definitely excellent. It's not at a buy point right now. That's the big issue. Um, that's the big that's the big issue. If you're going to look at companies that are near a buy point, and that's very important that you look at that, because yeah, careful. Yeah, okay. Earl, careful with Baba. Senate passed a bill to delist some of the Chinese companies. I agree. That's one of the reasons why I think you ought to proceed with caution on any of the Chinese stocks that don't comply with generally accepted accounting principles, and that would include Baba, unfortunately, because it is a powerful stock. Regardless of what they say. So we will see what's going to happen. I agree. Now, the delisting of Chinese stocks, I don't know if I'm not sure exactly if what the Senate can do on that, because really I think it's up to, I mean, I guess it's the FCC, but it's really up to and I think it's really up to the New York Stock Exchange as to how it is. But I don't know the ins and outs of that. I'm definitely not a lawyer, so I can't say. Senate just passed a bill for oversight of Chinese companies, so Chinese stocks fell to. Okay, well that makes sense. That makes sense. But I know that everybody. I know that there is a lot of animosity between China and the West, and some of it may be deserved. I don't know, but one of the things that I think is a reality for everyone out there, at least for me. China is going to be part of our lives for a while. So I'm not necessarily anti-Chinese stocks, to be honest. But I think you definitely should proceed with caution. I agree with that totally. And as a matter of fact, I think that's part of what TikTok is trying to do. They may be kind of trying to reconfigure themselves to have more of a California U.S. footprint rather than a Chinese footprint. But, we shall see. But that's a very good comment. I really appreciate that. I really appreciate that comment. All right. Buy me a Tesla instead of a stake. Yeah. I wish, if my stock trading goes good, I can buy myself a Tesla. Right now I'm not quite as fancy. I'm only driving a Honda. So, there you go. So I'm waiting for the Model Y, and hopefully that's what I'll be driving, because I do think that the Tesla is a really, really great car. I mean, I think that's definitely something that I think is pretty great. So, that's how I wanted to basically put it with the Chinese companies. So be careful with the Chinese companies. I do agree with that. It's a great comment from Earl and from Market Trader on Periscope. I think that's a great thing to say, because Chinese stocks may be impacted. You just don't know. You just don't know about it. So it's really, really tough. But there are so many great stocks out there right now. I think we're getting a breakout. RRR is good right now. Let me take a look at RRR really quick on the screen. Let me pull up my handy dandy other things. So I'll definitely take a look at that really quickly. UCO bought it a couple of days ago, 21. Where would you place a stop loss and take profits today? Okay, here's the rule on stop losses. And I just wanted to let me see if I can put this up on this. I don't think I can. I don't think you can see my calculator on the screen. But the way it works basically is when you take a when you set a stop loss, if you're long the stock, okay, and what I mean by long is that you own the stock and you're hoping it'll go higher rather than being short, which is you've sold the stock and you hope it goes lower. If you're long the stock, the quick way to calculate your stop loss is to take the price that you paid. If it's like $100, then multiply that times 0.93, and that will give you the stop loss amount. So on this case, you paid $21 for the stock, and your stop loss then should be set at 19.53, which is a pretty tight stop loss for a $21 stock. But the reason you want to set it that way is because you're going to be you may get it, it may move against you, and you just want to preserve your capital there. So when you have a relatively tight range like that in a stock that's under $50, you might want to go to a 8% stop loss, which is you would take the amount that you paid for the stock times 0.92. But here's the thing: if the stock moves up over 20% over you paid it, you should definitely sell at least half your position. And the reason that you do this again is to capture that upside. Because here's the thing: a lot of people will get in the right stock, they'll be in the right time,